Right. So we had a circumstance, right, where gold was down 7 months in a row. And you can go back to the late 1800s and not find that. And then since then, actually, gold has had a tremendous recovery. Not only that, but gold miners, as measured by either the Philadelphia Gold and Silver Index or the New York Stock Exchange Gold Bugs Index, are now up 4 months in a row. There is no other aggregate that has done that. Not any S&P 500 sector or mid-cap sector, no other bourse, no commodity, no other aggregate of any kind. And so relative strength is important. We know that if you consider all the factors that go into some of the great quant models, momentum and relative strength are very robust. And so gold has very desirable characteristics. Let's look at a few charts. I have some here and figure it out together.
Yes, please.
So I thought we'd start with why I think commodities in general, it has to go with peak inflation, are going lower. And we'll look at some of those charts and then juxtapose them against gold. And so here's, for instance, the iShares commodity ETF, GSG. It's one of two. Here is a comparative with the Invesco Commodity Index Tracking Fund. So those are two very liquid ETFs that generally mirror the CRB or the Bloomberg Commodity Index. Now, if I put gold in, we see a circumstance that's quite clear. These have been winners and are now going lower. Gold has been a loser and is now going higher. And so if I pull that back even further, now here's a 2-year chart, it's quite straightforward. We have a circumstance where gold has been unhappy, unwanted, unloved, whatever phrase one likes, where the other ones were overbought, overloved, and now it's all reversing. And I think that's important because not only does one want to be long gold, but I think it's right to be short in general commodities. Now, here is individual chart of the iShares GSG. No lines, no judgments, no annotations by me. Let's put some in. Now that's a very clear trend line. Take it away, put it back. Take it away, put it back, put some arrows in. Meaning we have bounced off trend to the penny, to the penny, to the penny, to the penny. And once you break trend, if you throw back to the underside of the trend line, yes, you are a rally to a difficult level. And so what we have here is a perfect instance of something that's hit its head and is turning down. By contrastation, look at the DBE. It's the same circumstance. Or look at, frankly, the Bloomberg Commodity Index. Now here's something interesting about this index. It's got a 15% weight in gold. And it's going down. Think if we took gold out of it, it would be even worse. And it just shows how bad this is. It all peaked right there on the spike in the Ukraine invasion. And you had Wall Street extrapolating $200 a barrel for oil, and everything would never end. It was the peak. And we've been going down ever since. So back to this comparative chart. And Danielle, let's look at now gold on its own, but with a relative performance on the bottom. So here's a simple 2-year chart of gold, and here's its relative performance to that Bloomberg Commodity Index. Now, what do we know? There are no lines here, but look, the bottom in relative, even as gold went lower and lower and lower all through the summer and autumn of last year, its relative performance was starting to turn up. So that's a very important circumstance. Look at it a different way with a moving average. Let's do this same thing longer term. Again, a 2-panel chart. It's gold on the top. It's relative performance to the entire Bloomberg Commodity Index, which has all the softs in it, from cocoa and cotton and sugar to all the grains like soybeans and corn and wheat. It's got industrial metals like copper and nickel and zinc. It's got energy. And what we know is this is a major turn, right? You have bull phases and bear phases on relative charts. And this has all the elements of a bearish to bullish reversal. So if we were to just look at the relative line, right? Again, it's gold on the top, relative performance to the Bloomberg Commodity Index on the bottom. Let's look at that chart on its own. So now we're just looking at one line. It's simply one thing divided by another. It's gold divided by the Bloomberg Commodity Index, which gives you an RS line. And it has all the elements of a turn. Now instead of using an automated trend line, we can use an actual trend line. Ready?
Yep.
Actual, automated, actual, automated. And what do we know? It was a perfect double bottom, literally to the penny. And it has all the elements of a turn. I just think it's very important. I mean, maybe we do a little bit on gold itself. Does that make sense long term?
Yes.
So interesting here. We have gold at its low, right? NASDAQ was at its high, the dot-com peak. Nobody wanted gold. Everyone wanted Cisco. Cisco's the most valuable company in the world. Now it's, a small thing. Let's put some lines in. We know there's a trend line, right? It's very clear. We can draw the lines this way. Doesn't matter whether you call it a wedge or an ascending triangle or it's all set up to break out. Another way to draw the lines, call it this, cup and handle.
Yep.
Call it a head and shoulders bottom. Or is it this, a big uptrend and a big consolidation? A big advance and a big rest.
Yes.
Put them together, that's all it is. A great move, you rest for basically a decade. You ascend for a decade, 2000 to 2010. You rest for a decade, 2010, 2020, plus or minus, and in principle, launch up and out. I really think it's great. And just one thing also, it's such a small asset. We know there's how many gold stocks in the S&P 500? One, Newmont. We know that there are only 8 or 9 in the entire Russell 3000. The Russell 3000 represents 98% of the investable capital in the United States. And there are 9 gold stocks in it. In fact, if you took the entire market cap seen here on the table of every single gold and silver miner in the Philadelphia Stock Exchange Index, they add up to $263 billion. What is that? That's about the same as Bank of America at 268. And what is that? Bank of America is 73 basis points weighting in the S&P. 0.75%. Gold is a teeny asset, and it doesn't take much money to move these stocks if money were to move into them.